Alright, today we are going to be jumping back into the Bitcoin price action. Today's going to be a shorter video just covering the small dump we had on Bitcoin and how we plan for this. And of course, we'll cover all the data that we are now showing on the charts with this small pullback within here and what I kind of expect going forward. And before we jump into the TA, did anybody watch the debates last night? Let me know your thoughts in the comments below who you thought won. I think it's pretty obvious who won the debate, but I'd love to know your thoughts. Feel free to go crazy in the comments and boost the algorithm. Also, if you're really politically motivated, go ahead and check out my Discord, link down below. I now have a politics channel in there, so a lot of debating going on within this chat right now. So make sure to go check that out if you are at all interested. Just, of course, keep it respectful, no harassment in my server. And with that out of the way, let's go ahead and jump into the Bitcoin price action. So something else I posted on my Discord was we had a 4-hour hidden bearish divergence. This is a warning sign that I noticed after I had recorded my video yesterday. You can see over here in the Cranes channel, hidden 4-hour bear div, letting everyone know this is a bearish sign I was seeing on the charts, especially because we hadn't gotten back above the golden pocket. We were still rejecting these trend lines. You know, I said the more times you tap something, the more likely it is to break, but that's never a guarantee, of course, and this 4-hour bear div could have given us that warning sign that we were going to roll over here. How you can find these is lower high on price, higher high on RSI, showing absorption. Now we got to figure out, are these fibs within here going to hold, or are we going to sweep the low, potentially, just grab 58 real quick, or is this going to roll bearish? And this is the top for Bitcoin, as we discussed in my last video. There are meme coins going off, so we do have some suspicious signs in the market. But as I've been saying throughout my videos, I just don't think they're going to let shorts get away with it. I do think a squeeze up to all the way to all-time highs is very likely here. Take out all that liquidity, get retail euphoria back into the markets before that final top would come in. And what we want to be looking out for that bullish scenario to actually play out is that we would like to see price hold these Fibonacci's within here, as well as the sweep level, previous sweep level, all the way back at $60,000. We talked about this was a likely place for price to magnet after coming up here, likely to, retrace down to the sweep level to find support there once again, and we pixel touched it. So nice area to find support. If you go in here to the TPO sessions, and when we did come down to this level, we did in fact sweep a previous poor day on the TPO profile. You can see within here, no single print tails, so likely for this wick right there to get swept. We went ahead and did it, and we are now closing candles on the 30-minute back above that level after making good lows. You can see 2 single prints at the bottom of our TPO profile. That is great to see, but we want to be watching out because we do have these single prints in the middle of a range. Inefficiencies we're likely to get retraced to no matter what. So this will be the telltale sign. Are we going to go ahead and reject this to head down lower? Very possible. Or are we just going to squeeze on up? Also very possible, right? Oh, and I don't know why my fibs are where they are right now. Let me go ahead and actually move this back down so you can see where we are on the fibs. Pull and swing, low, swing, high. We're touching that golden pocket, so right in a mathematical area to find support as well, but we still have these big walls below us. So if we are going to get that pullback, let's say we tap the single prints, roll over once again, I would be looking for some sort of hourly bullish divergence to come in there into all of these big buyers in the order books, and this is another big level to find your low coming in. That would also fill the CME gap that we've been talking about. This gap right here is a likely place for price to want to retest, so certainly do not be surprised at all. It's very likely that we do come back down lower into the fibs and hopefully on some sort of hourly bullish divergence within here. That's something you always want to see at the lows. So yeah, this is kind of what I'd be looking for, and I would potentially take a long within the CME gap. Like I said, I was looking to take a long potentially with these other orders in the order books that we have here. So we'll see if I have the opportunity. But of course, do not trade based on what I'm telling you guys. I never set blind limits, and order flow changes on a dime. So yeah, gotta throw that out there. Also thought I would bring this up since I made it. What are you looking at right now? What in the world is this? These are ETF flows categorized by positive and negative volume. So you can see on the initial launch of the ETF, lots of buyers in here. Then we go ahead, there's a gap in volume. What is this gap? Well, it's the weekends as well as just days where there was really no net volume. So I didn't include a box for that, but we do see big selling then going on towards the bottom. So clearly your market participants of this ETF are not starting off good, buying the top, selling the bottom, but then we do see them start accumulating more after the recovery and resumption of the range, and we do see that buying pressure continuation throughout this entire uptrend here on Bitcoin, finishing off with our largest inflow day at the very top of this wick. March 12th was the highest inflow day for those ETFs. We then pull back. Once again, you got panic sellers selling the low here on our ETFs, high outflows at the lows of price before rallying back up. You see them buying the tops once again. Price pulls back, they're selling the lows. Price then reclaims, they start buying once again, they buy all the way through the highs. And what does price do next? Well, it of course comes back down and they start panic selling again. So if trend is continue, you'd probably expect a reversal here on price at some point, and then their ETF inflows will start ramping back up and they'll start buying the highs once again. Or we could just get another dump and they start panic selling the lows again. This is not really something I'm using to base my outlook on. I just made it because we were talking about these ETF inflows and outflows in the Discord, so I thought I'd visualize it in the best way I could to kind of share it with everyone. And that's why I'm showing it to you in this video, because I haven't seen anybody else do this with the data. So I think this is a great way to kind of visualize what's been happening with the net inflows and outflows of those ETFs. So there's that. Getting out of Bitcoin, let's talk about the S&P, because we also got a big dump on the S&P, and I will say this one actually scares me. When we had that debate yesterday, I think there was a lot of euphoria in the fact that people were starting to price in that Trump was going to get elected, because most people assume Trump getting elected is very bullish for markets, and I've actually been cautioning this. I don't think politicians make that much of a difference in the economy, especially when most of these effects are lagging. The unemployment rate going up right now is not just going to instantly drop, and even if it were to, you're still going to see those effects ripple on into his presidency. So I've been warning, there's a ton of recessionary economic indicators that point towards a depression type event happening into 2025, 2026, and I don't think Trump is going to stop it. So the fact that we had a bunch of euphoria around that yesterday could have been exit liquidity for smart money. The fact that we made a great high here on the S&P kind of worries me. On the daily time frame, this does not structurally look good. This is certainly a topping structure, so we got to be careful with the S&P. We got to make sure this does not just roll over and head on down here. If we do start breaking these ranges that we've been talking about, looking at here on the channel, that's not going to be good. But as I've said before, this low is still bad, so sweeping this is to be expected, and I wouldn't get too scared as long as we can recover the sweep level and not just fail and start closing down below. So we'll be watching the S&P, but so far, yeah, this is certainly the one thing that kind of scares me on the charts right now. Luckily though, even with the S&P dumping, the dollar also continued down. So if we jump in here to like our hourly time frame, you can see the dollar looks pretty bearish here. We made, double top, came back up, got closer to that trend, and we're now heading down once again. So let's see if we can confirm lower lows here on the dollar, which would signal a continuation in Bitcoin and the S&P as well. But that is going to be all for today's video. Just a quick update on what to be watching out for. We are going into the weekend, so don't expect too much, right? It's probably just going to be another low volatility sideways chop for the next couple of days, but there is always a chance market makers want to make some volatile move with that low volume, so be on the lookout there. And if you have any questions about anything I talked about in this video, make sure to join the Discord, links in the description down below. And don't forget that event that I'm running with BingX is about to run out. So if you want limited time bonuses and rewards for futures trading on an awesome exchange, make sure to go check that out and use my sign up link down below. And with that being said, thank you all so much for watching, and I'll see you all in the next video.